down 23,000. That is how many jobs the economy actually lost in July, the first monthly drop in months when Wall Street was looking for a gain of about 83,000. And on the day that number hit, the market rallied and the fear gauge fell. Coach B here. This is last week in the markets, a melt-up week capped by a jobs report that should have scared everyone and did the opposite. Let's break it down. It started Monday night with Palantir, ticker PLTR. Adjusted earnings came in at 41 cents a share against an estimate of 35, revenue of $1.935 billion, up 93% from a year ago, with U.S. commercial revenue up 149%. Then the guide, Palantir raised full-year revenue guidance to about 82% growth. The reaction was violent. The stock jumped 29.5% Tuesday, and short sellers lost roughly $3 billion in a single session. By Friday, Palantir was up about 39.8% on the week. That one print lit a fire under the whole momentum complex. Rocket Lab, ticker RKLB, ran 27.5% on the week. SpaceX, ticker SPCX, gained about 23%. NVDA added almost 12%, so the whole tape went green. The S&P 500 through SPY closed at 773, up 3.5% on the week. The NASDAQ 100, the Qs, led, up 5.1%. Small caps, the IWM, up 3.6%. The Dow through DIA, up 2.9%. And here's the tell. The VIX, the fear gauge, closed at 14.9 and actually fell on the week. That is a melt-up, not a panic. Then Friday, the jobs report, non-farm payrolls fell 23,000, the first monthly decline in months when the estimate was a gain of about 83,000. The drop was led by 53,000 fewer government jobs, plus softness in retail and leisure. Unemployment did tick down to 4.1%, but that was because people left the labor force, not because the economy added jobs. And here is the paradox. The economy lost jobs, and the market rallied, and the VIX fell. Why would a genuinely bad number lift stocks? Because the market grades data against what it thinks the Fed will do next, not against the headline. Coming into Friday, the odds of a September rate hike were still live, around 57%, and just a week earlier, the Fed had held rates on a divided 9-3 vote with 3 officials wanting to hike, so the fear was a hike. A weak jobs number took the pressure off. Odds of a September hike dropped to about 44%, and the odds the Fed just holds rose towards 60%. The hike the market was afraid of got less likely. That is why bad news traded green. Not everyone got the memo. Celsius, ticker CELH, reported Wednesday and got hit. Revenue of $817.9 million missed the estimate of $872.6 million. Earnings came in at 36 cents against 41 expected, and sales of its flagship Celsius brand actually turned negative, down almost 12%. The stock fell about 18.5% to a 16-month low. Let's run the board. Palantir plus 39.8% with that $3 billion squeeze. Rocket Lab plus 27.5%. SpaceX plus 23%. NVIDIA plus about 12%. And on the red side, Celsius down 19% on an earnings miss. Let me show you Palantir's chart because it is the cleanest picture of the week's fuel. Monday, it closed around $125 before it reported. Tuesday, after the print, it closed at $162.66. By Friday, it was up at $172. One earnings report, one gap, and a melt-up that pulled the whole momentum group up with it. And that is the lesson of the whole week. A bad number is not automatically a sell-off. It depends on what the Fed does next. This week, with a hawkish, divided Fed, weak jobs data was relief, so stocks went up on news that in a different regime would have crashed them. If you only ask, was the number good or bad, you will get weeks like this one wrong. Ask what it does to the Fed's next move, and the paradox disappears. That sets up next week. The big one is the CPI inflation report. The print the Fed says is the real deciding factor for September. There is more earnings on the calendar too, and we will walk all of it on Sunday's week ahead. Quick reminder before we go, this is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. Every ticker here is just a teaching example. That's the week. Good luck in the markets, no matter what stock you're into.